Everyone. I was running a little bit early for this historic event we are about to see today, so I thought, let's just go live right now already. Was running a little bit early, but this is going to be an historic event, so yeah, fuck it, let's go live already, because Bitcoin is creating some interesting patterns right now at the moment. We can be seeing new news actually coming out. The probability of this rate cut we are about to see today is getting a little bit readjusted. If we're going to be having reloading this page over here, oh, it's still actually 63%. I just checked it on my phone and it was a little bit different. It was a little bit different on my phone. It was like 59% of a 50 base point rate cut, but a way higher probability for a 25 base point rate cut. And this is majority of the reason because I think right now majority of the banks are right now predicting a 25 basis point rate cut, except JP Morgan, which is the only one actually from of these major bank list which is predicting a 50 basis point rate cut. So banks are right now predicting a 25 basis point rate cut. Now I personally also do believe a 25 basis point is going to be more likely. Like I've been explaining for the recent few days, well, cutting the rates for the Fed more aggressively is actually going to be a more kind of bearish thing in my opinion. Why? Because that shows the market that there's something in the market which they do not have under control. And you want to be seeing these rates actually getting cut very, very slow and steadily, because that shows the market that they have everything under control, that they have their game plan, and that they know what they're doing, right? That they don't want to be cutting their interest rates too aggressively, because if they want to be cutting their interest rates too aggressively, it means that most likely something is gonna break in the market, and they fear that, of course, and that's why they want to be repositioning their game plan. But I do not think it's going to be very likely. I think a 25 basis point in the end of the day is going to be more likely. Anyways, regardless of this scenario, it doesn't really matter, because if we're going to be having a look in towards the market is actually favoring a 50 basis point rate cut. They just want it to be over and done with, because what we can be seeing in market, of course, for the stock market, this probability of the rate cut has been readjusted a little bit, but having a look in towards the stock market has been getting a little bit of a cool off over here, right? So with the probability getting readjusted, the market is actually acting a little bit more bearish. So yeah, the market thinks a 25 basis point rate cut is going to be more bearish and a 50 basis point rate cut is going to be more bullish. However, me personally, I think it's the other way around, actually. I think whenever we're going to be seeing a 25 basis point rate cut, the FOMC meeting is going to be very bullish. I think at the point, if we're going to be seeing this 25 basis point rate cut, I think Jerome Powell is going to be saying during the FOMC meeting that everything is under control, and right now they're changing their policy towards rate cuts. But like I've shared today in my video and also on my Twitter right over here, today marks an historic event with the FOMC meeting. But all eyes will be over on Powell during his speech. If he mentions anything about a recession, probably he's not going to be mentioning that aggressively, but like hinting in any way, shape or form, markets will likely nuke towards the downside. But if he reassures that everything is under control, which is going to be the more likely scenario in my opinion, definitely, especially if we're going to be seeing this 25 basis point rate cut, then markets could jump exponentially. And if we're going to be having a look into the short-term price action for Bitcoin, we can actually start to have a look into some kind of a falling wedge actually being created right now. And guys, if you have been following me for a longer time, you of course already know that I love these falling wedge patterns. I absolutely love these falling wedge patterns. You could be considering this falling wedge pattern like some kind of a continuation pattern, and in that case, some kind of a bullish pennant being created, right? And in that case, we can be having a look in towards a price target all the way up towards that 63k level. So that is going to be absolutely insane. Now, to answer some of your guys' questions, because I already know some of you guys are having this question right now, I will not be trading this FOMC meeting. I just think it is going to be too risky for my personal trades. Even if we're going to be seeing this breakout outside of this, let me quickly grab it, outside of this falling wedge pattern over here, even if we're going to be breaking out right now because of this FOMC meeting, I'm not going to be entering my trade right now. I will be waiting until the market is going to be cooling down, because in my opinion it's just going to be no way to be predicting what is going to be happening during this FOMC meeting, and even for the rate cuts first of all, and then afterwards for the FOMC meeting, what Jerome Powell has about to say. I do think honestly it's about to be bullish. I do think we are about to see some kind of a continuation, but of course we all already know during the FOMC meeting, during the rate cut decision actually, we always see a lot of fuckery going around. Always we see a lot of positions actually getting liquidated. Always we are seeing a lot of volatility, and do be prepared for the same exact thing during this FOMC meeting again. Anyways guys, let me have a look into the live chat, because we are right now live with 61 people. Glad to have you all guys in the stream. We are about to be seeing it live. We are about to witness it live. So make sure to press up the like button. Also, let me quickly ask a friend if he already has the live link for the FOMC meeting so we can be watching it. All right, there we go. So just prepare some things. All right. So let me know what you guys think about this short-term falling wedge that we are creating over here. But of course, having a look into that longer-term price action. Well, right here, yesterday actually, very interesting. I want to be talking about this for a minute. Yesterday, everyone was flipping back bullish again, right, at this beautiful, insane pump. Now, honestly, I do think that this was a little bit of that pre-FOMC meeting pump. Honestly, also because of the stock market also pumping towards the upside. Really, it's also going to be really mattering what's going to happen with the stock market. That will also have a huge effect on the Bitcoin market. Anyways, Bitcoin has been seeing this beautiful bump towards the upside. We have exactly been going live at the exact top over here, and I have been warning you that I'm not going to be shorting the market, but definitely at this point over here, I was gonna get cautious. Why? Because Bitcoin was creating this bearish divergence. Bitcoin has been running in towards the massive levels of resistance over here as well, this horizontal level of resistance over here, and we have been beautifully getting this correction from of this level. But let's see if the FOMC meeting is going to be bullish today, if we are going to be getting a break above. Because if we're going to be seeing a volatility, I can definitely expect like a 5% move at the very least being created. This is going to be like an historic event, right? All of the previous FOMC meetings, during the day itself, we did not see a lot of volatility like you can be seeing over here. Yes, we did see some volatility, but it was not a huge candle like, for example, right over here. Now, I do expect that this one is going to be a lot different, because this one is going to be an historic one. During all of these previous times over here, we have seen rate cuts, or during these previous times, we have seen nothing happening at all. So the interest rates remaining unchanged. But this time around, we're going to be cutting the interest rates, which inevitably in that longer term is going to be very bullish for the Bitcoin price action. Of course, for that longer term, this is going to be the most bullish thing which can happen for a market. Rate cuts, always the most bullish thing which can be happening for the market. In that longer time frame, we can definitely see that whenever these rate cuts have been happening, that was the moment where Bitcoin went exponentially right after. We want to be seeing these quantitative easing. Right now, we're still seeing quantitative tightening, and we want to be having a look as well during our FOMC meeting if the Fed is going to be announcing anything regarding quantitative tightening. But like this post is saying, I do not think it's going to be very likely that the Fed is going to be announcing it during this meeting. But you are going to expect an update on the balance sheet policy with interest rates right now changing, of course, getting cut. So this is going to be a massive boost to liquidity, and likely risk assets such as Bitcoin will be surging in price when a QT is stopping. So we are going to be getting some hints, for example, with our interest rate cuts, right? But I do not think that the Fed or Jerome Powell is going to be mentioning it today in today's meeting, I think it's going to be more kind of like everything is under control, right? Right now we're going to be changing our policy. Right now it is the time to finally cut the interest rates. Like some things like this, right? But we just need to be watching it live. We just need to be watching it live. And let me have a look into what's the live chat right now. Opinion about opening your altcoin in 5x leverage. I don't know about. So if you want to be swing trading, that's fine. But if I'm going to be holding an altcoin, I'm always just holding it. I'm not going to be holding it with a leverage trade. No, for sure not. 25 basis point plus JP talking about we soft landing, best scenario in my opinion. Yes. Yes, indeed. But JP Morgan is actually predicting a 50 basis point rate cut. But indeed, if anything like a soft landing is going to be mentioned today by the big banks or even Jerome Powell or like the Fed, if a soft landing is going to be getting mentioned, guys, definitely prices are going to surge. Prices are going to pump towards the upside if a soft landing is going to be getting mentioned. And I do think it's actually going to be pretty likely that this is going to be getting mentioned. Could Ethereum go to 2K? My liquidation is at 1700 approximately. So let's have a look into towards a few altcoins. But really, for this show right now, for this live stream, Bitcoin is going to be the most important one. Bitcoin is going to be the most important one. But let's have a quick look into what's Ethereum. Because I've seen something very interesting actually getting created for Ethereum right over here. Because Ethereum is right now creating some kind of a symmetrical triangle over here. I think this is going to be very important to be having a look into what's for Ethereum. Now, I do not like this down sloping resistance level. Honestly, I do not like this. Maybe this is going to be more kind of a descending triangle. But I don't know, like Ethereum has just been acting so bearish. And even with the clip that has came out today, I don't know if you guys have seen it, from Vitalik, the CEO of Ethereum or the founder of Ethereum. Well, guys, it's absolutely crazy in my opinion. Ethereum, I just don't know. I don't want to give up on Ethereum right now. I don't want to give up. But definitely, it is doing some more weird things, and it is definitely not performing as how I want it to be performing, right? But definitely 20 minutes right now left for the interest rate decision. And I have actually drafted this tweet over here on Twitter. I've drafted this tweet over here. The Fed just announced a 0.5% interest rate cut. But actually, let me change this because I think 25% is going to be more likely. I'm not sure. I definitely see both scenarios playing out. It's literally a 50% probability. But I just think if I was in a position of the Fed, I just think a 25 basis point rate cut is going to be more probable. And just having a look into what's the politics going on, of course. If I were the Fed, I do not want to be cutting the interest rates too aggressively. And yeah, these probabilities are actually changing by the minute because I just checked like 1 hour ago, it was 59% on 50 basis point rate cut. Right now it's 61%. A few minutes ago it was 63%. So it is actually changing by the minute. Definitely something very interesting to be having a look in towards. This is going to be the first. So how it goes down, by the way, let me have a look. Let me grab this economic calendar for the people that are new, for the people that don't understand anything about what's going to happen tonight. First of all, we're going to be getting our Fed interest rate decision, and that's going to happen in 20 minutes. Then after that, we are going to be seeing our FOMC meeting. And during the FOMC meeting, Jerome Powell is going to talk and go live. But this is going to be the more important part because depending on what he is about to say, markets could absolutely nuke towards the downside or pump exponentially towards the upside. So that's going to be more kind of the more important part. Right now, these interest rates are already getting kind of priced in. They are already getting kind of priced in the market right now. And definitely do be prepared for a lot of volatility. Now, a lot of new people are joining the live stream right now. And I would like to say, that I'm not going to be trading this. I'm not going to be trading this. Maybe if I'm going to be seeing a very good opportunity arising in the market, maybe if we're going to be seeing like a huge crash and I think we're going to be at a huge level of support, maybe at that moment I would like to buy the dip. But honestly, I just think it's going to be too risky. Now, usually what does happen during an FOMC meeting and Fed interest rate decision is usually if we're either seeing a big dump at first, then we recover it with a huge pump. All right, and that's usually how it goes down. Now, if we first see a huge pump, usually we recover it with a huge dump. Usually we just grab the liquidity and then do the opposite. Most of the times this has been happening during all of the interest rate decision that I've been witnessing live. But let's see if it's going to be happening again. Ethereum will not go there. You are safe. Yeah, but below the 1700, I don't know. I don't think it's gonna go below 1700. Yeah, it must be getting back towards this range over here, which I don't think is going to be pretty likely. Now, it could dip towards like the 2K level, right? These points over here, maybe a little bit below towards, for example, 1950. But I don't see Ethereum coming down towards 1700. No, honestly. I think you're safe. I think you're safe. But of course, no financial advice. Opinion about opening your altcoin in 5x leverage. I would not. Like, if you're going to be swing trading, yes, you can be opening a leverage trade on altcoin with leverage. But if you're not going to be swing trading, if you're just going to be holding, I would just buy it spot. I mean, and that's what I'm doing. I always like to hold my tokens, deposit it in towards my ledger, not look towards it, and in 1 year time, I hope it goes 10x. I hope it goes 10x. All right, so here's the live stream over here, already loaded up for a little bit later, because yeah, in 17 minutes we're about to see the Fed interest rate decision, and after that, in about 1 hour or like 45 minutes from now, we're about to see the FOMC meeting, which the FOMC meeting is going to be the most important part. And by the way, we are right now live with 88 people live in the stream. Guys, if you're going to be excited about the FOMC meeting today, definitely do be prepared for volatility, but make sure to be smashing up that like button. It would definitely help me out a lot, because we are right now live with 85 people in the stream and only having 26 likes. Make sure to be pressing it up at least towards the 50 likes. That would be absolutely lovely. If the Fed cuts rates by 0.25%, would the market go up or down? So honestly, what I've said earlier in this stream, previously, it was actually, so this is going to be a little bit hard, right? So you have to pay it a lot of attention towards what I'm gonna be saying right now. So previously, the probability of a 50 basis point rate cut was actually higher. But right now it's decreasing, and as of today, while it has been decreasing, for the stock market, it has been kind of dumping towards the downside, right? So I think the market is actually pricing in a 50 basis point rate cut as more bullish than a 25 basis point rate cut. That's what the market is pricing in. So a 25 basis point rate cut is going to be more bearish, because people are right now pricing in a 50 basis point rate cut. So yeah, 25 basis point is going to be getting priced in as bearish, I think, for the market. So in that case, I think we're going to be seeing a dump towards the downside. But in my personal opinion, I actually think that whenever we're going to be seeing a 25 basis point rate cut, it's actually going to be more bullish, because I just think a 50 basis point rate cut is going to be more kind of on the aggressive side. And whenever we're going to be getting a 25 basis point rate cut, it's actually showing that the Fed is having everything under control. And a 50 basis point rate cut is going to be too aggressive, in my opinion. A 25 basis point rate cut is going to be showing that a soft landing is going to be more likely, which is the most bullish inevitable outcome. So yeah, I think for the market, so if we're going to be seeing, by the way, a 25 basis point rate cut, I think, first of all, we're going to be seeing a dump because the market is pricing this in as bad for the market. But after that, in the FOMC meeting, Jerome Powell is going to be coming out and saying, all right, we have everything under control. We're still aiming for a soft landing and it's still looking very good. And then the markets are just going to be reversing like crazy back towards the upside because that's what we want to hear from Jerome Powell. That's going to be in this scenario of a 25 basis point rate cut. But of course, this is just going to be some pure speculation because nobody knows what's going to happen. Absolutely nobody knows what's going to happen. If we're going to be having a look into what's the facts, well, right now, all of the major banks are predicting a 25 basis point rate cut, except from JP Morgan, which is the only one which is going to be predicting a 50 basis point rate cut. So who knows? Who knows? Also, the majority of the market is still pricing in a 50 basis point rate cut. So it's literally going to be 50-50 in my opinion. This is going to be very exciting. And Trader PA, welcome to the stream. How is it going? Very well, my man. It's going to be very interesting what is going to happen today. This is going to be an historic event today in the market. I will, however, say for the people that are joining new to the stream, I'm not going to be trading this event. I'm only going to be trading this event over here if I'm going to be seeing a very, very clear opportunity in the market, but I don't think it's going to be likely. And yeah, if I'm going to be trading it, if I'm going to be seeing a very clear opportunity in the market, of course, there will be some live trading going on and you guys can all enjoy with me. But let's see if that is going to happen. JP Morgan said 0.75%. I think that was a little bit earlier, but right now, the most recent news from what I've seen is that they are expecting a 50 basis point rate cut. That is like the most recent. And also, I think we can be seeing it in this screenshot, right? Yeah, JP Morgan over here, right? JP Morgan Securities LLC. It's the only one which is estimating a 5%. And all of the others, like you can be seeing over here, are all estimating. I don't know if you can see it clearly on the stream, but yeah, all of the other banks are estimating a 5.25%. So yeah, JP Morgan. I think the 0.75% was old news because I also saw something like that last week. But right now, the more accurate one is going to be 0.25%. 50 basis point rate cut. So definitely an historic event. Almost flat on all positions heading into the FOMC. Yes, indeed. I think that's going to be the more sophisticated choice in the market right now, because definitely a lot of volatility is going to be inevitable. Nobody knows in which direction. I think, honestly, if I had to choose a direction, it's going to be more likely it's going to be bullish. But honestly, nobody knows. And it's just not worth the risk, in my opinion. It's just not worth the risk. I've been witnessing a lot of FOMC meetings, a lot of interest rate decisions, and always there's a lot of fuckery going around. And should I close my trade right now? I'm not sure in what position you are, man. I'm not sure in what position you are. But yeah, of course, I cannot give any financial advice. But all I can say is I myself am not in a position. I myself am not going to be trading this FOMC meeting unless I'm going to be seeing a very clear setup. But usually that's not the case. Can you take a look at the daily massive head and shoulders on Fetch AI? And can you give your opinion if it's valid? Well, right now I'm not going to be having a look into what's altcoins. But hang on there, because during the end of the stream, after the FOMC meeting, I think definitely there will be a time and a place for altcoins. What I can do, however, is quickly have a look at how the market is performing in general. Because, yeah, we are seeing some nice bumps, actually. For Beam, Sui, Phantom, love to see it. And if we're going to be having a look into what's the top losers, our Breath, all right. Say Injective, some top losers out there, which I don't like to see, but yeah, just good times to be accumulating still. Pepe down 3%, And if I'm going to be having a look into what's the Bitcoin dominance still just increasing. This is absolutely crazy. It looks like the Bitcoin dominance is going to be running towards that 60% mark, which if it's going to be hitting this 60% mark, guys, this is going to be a pivotal moment for the Bitcoin dominance, in my opinion. Because this is going to be that level where whenever we broke down below from this level, below that 60% level, that was the moment where the market absolutely nuked and all of the money started to flow in towards altcoins. So if we're going to be retesting that level right here, I think same thing might be happening again. This is definitely going to be a huge level of resistance. So let's see if we're going to be going towards that 60% level. Guys, one thing I know for sure is my altcoins are bleeding like crazy right now, but I'm just going to be dollar cost averaging in towards my altcoins, and eventually we're going to be seeing this massive drop, and then I'm going to be glad with my average entry over here. I'm going to be glad with my average entry, because yeah, eventually I just think it's gonna drop like crazy. Eventually it's just gonna drop like crazy. Anyways, 10 minutes left. 10 minutes left. Ethereum open price, it's in a loss, but it takes a lot of proportion of the portfolio value. I don't know, man. I don't know. Like, it's always these tough questions. I can't decide for you. We are seeing a little bit of a breakout right now for Bitcoin in of this falling wedge pattern over here. But really the question is going to be, how accurate is this breakout going to be over here? Because in 8 minutes, we're going to be getting our interest rate decision. And after that, the FOMC meeting, which is going to be even more important. So yeah, glad to have you all guys here live with me. 91 people in the stream. Let me grab my phone, because usually I am actually one of the first guys which is announcing what's going to happen with the interest rates. Usually I am actually. And I'm just going to be checking it live on my phone and tweeting it instantly on my Twitter page. So let me grab my phone right now. All right, because for the FOMC meeting, what I have always, for the interest rate decision, what I always do is like set up on many pages all notifications, so I can get the first one, the guy which is sending out the update or the interest rate at first. I know it at first. It's that easy. So that's what I always do, and that's how I almost always get the interest rate decision at the first, as the first guy. So that's what I'm gonna do right now. I'm gonna go towards my phone and just go towards some pages I like and which are always fast, and then I'm just gonna turn on my notifications right now. There we go. All right, and that's how I know it as first. Also, yeah, I will be tweeting it. I will be tweeting it on my Twitter. I think a 0.25% rate cut is going to be more likely. Honestly, let me know, guys, what you think. I will create a poll right now. I will create a poll. Let me quickly find where to do this. Long time. All right, start a poll. Interest rate decision. 50 base point or 25 base point. Start poll. Let me know, guys, in the poll down below in the live chat. Are we gonna see a 0.25%? Guys, if we're going to be going and having a look into what's the statistics, once again, every major bank right now is predicting a 25 base point rate cut, except JP Morgan. And if we're going to be having a look into what's FedWatch Now from the CME group, 59% chance of a 50 base point rate cut and a 41% chance of a 25 base point rate cut. So it's going to be kind of a 50-50% chance, in my opinion. It's really going to be kind of a 50-50% chance. Let me go towards some more pages. There we go. Another one. Guys, I want to be knowing it as the first guy. I need to be knowing it. Which one is another one? All right, I think we have enough now. So yeah, a little bit of a falling wedge breakout right now towards the upside. Only 4 minutes left, and this is really going to be very exciting. Also for the polls, it's a 50-50% split, almost. It's almost a 50-50% split. So it's going to be very exciting, guys. In my opinion, a 25 basis point rate cut in the short term is going to be bearish. But whenever we're going to be getting the FOMC meeting, it's actually going to be bullish. But the interest rate decision is going to be very important, but the FOMC meeting is going to be even more important. All right. So only 3 minutes left right now. 3 minutes, guys. It's going to be very exciting. It's going to be very exciting what's going to be happening right here. And make sure to, after the interest rate decision, stick to the stream. Because after that, we're going to be having the FOMC meeting, which is going to be even more important. That's going to be like the most important thing of all. Because still, yeah, these interest rate decisions are already getting kind of priced in the market, right? They're already getting kind of priced in the market right now. Anyways, let me know, guys, what you think is going to happen. Will 25 basis point be seen as bearish for the market, as everyone wants 50? Yes, I think 25 will be seen as bearish by the market, because earlier the probability of a 50 basis point rate cut was actually higher. And today it has been getting adjusted towards 25 basis point rate cut. And actually the stock market has been reacting negatively towards that, right? We have been seeing a small little consolidation towards small little dump towards the downside. So yeah, the market is pricing in a 25 basis point rate cut as more kind of bearish for the market. They might cut it with 200 basis point. That's not going to be likely at all. That's going to be extremely unlikely. Almost 100% chance that that's not going to happen. It's not like we're in a recession right now. It's not like we're in a recession. If we were in a recession right now, that might have happened. But we are not. Only 1 minute left, guys. Only 1 minute left. So make sure to be prepared. Make sure to be prepared. I think 0.25% is going to be more likely. But anyways, I'm going to be fine with both scenarios. So let's prepare ourselves. Always, this is going to be coming out a few seconds later. So let's have a look into our chart for Bitcoin on that minute time frame. What's going to be happening over here? And let me actually try to add something. There we go. There we go. So let's see what is going to be happening over here. Only 2 seconds left. .5%. 0.5%. All right, that is crazy. We are seeing a huge bump right now in the short term. Definitely, of course, because like I've shared, 0.25% was going to be having a bearish effect in the market. Right now, 0.5% is a bullish effect, right? Still, the market hasn't priced in it with a 41% probability. So yeah, we are seeing a pump right now. All right, this is absolutely lovely to see. This is absolutely crazy. Let's see if we can be continuing this pump over here. Let's see if we can be continuing this pump over here. But of course, like I've said, more importantly, the FOMC meeting is going to be more important than this rate cut. The FOMC meeting is going to be even more important. So 0.5%, a 50 base point rate cut. CME gap still open at 54k, yes indeed. But I've shared it so many times. Right now, I'm not going to be sharing it again. Right now, I'm just going to be having a look into what's this price action because this is absolutely lovely. This is absolutely lovely and wow. Tagging these previous highs over here right now. Okay, so guys, right now we have had our interest rate cut. I do think that anytime soon, because this was already kind of priced in the market, right? Let's have a look into what's the stock market in a minute. But right now, I do think the market is going to be settling down any minute now. Anyways, what's going to be even more important is the FOMC meeting, which is going to be happening in half an hour from now. So that's going to be even more important. Let's see if we can be seeing some follow through towards the upside. Definitely, this is going to be bullish for the market. This is going to be marking an historic event. Let's have a look at this chart over here. Here, this looks absolutely crazy. This is an historic event over here. Our first rate cut in this cycle. Let me actually make a post about this. Let me make a post about this. This is an historical pivotal event in market. This interest rate cut marks an pivotal moment. Or let's have a look at a better text. The Fed just got its there we go. All right. This is a pivotal moment. So yeah, this pump getting retraced a little bit. Do expect this to be cooling off with consolidation. It's always the case with these news events, right? Always the case with these news events. New S&P all-time high. Let's have a look into what's the stock market. Yes, indeed. It just touched a new all-time high. Right now, instantly getting back below. That's not good at all. But guys, I've been saying it. Whenever the S&P, the stock market, is going to be printing new all-time highs again, I think at that moment, we are about to see all-time highs getting reached for Bitcoin as well. The friendly inks. Yes, all right. Let's have a look at what altcoins are doing right now. Let's have a look at altcoins. Yeah, altcoins instantly also pumping a little bit, but of course a lot less than Bitcoin is doing. Some altcoins showing strength, such as Bitensor, Stacks, Render. Yeah, looking good. Some altcoins are definitely pumping way more than Bitcoin is doing. I like to see that. Here, Bitcoin is... Where's Bitcoin here? 1.3%. All of these altcoins are pumping more than Bitcoin is. But still for the Bitcoin dominance, it's going up. The Bitcoin dominance is still going up. I think it's still going to be going towards that 60%. That's absolutely crazy in my opinion. Hello, Hustle Haven. Welcome to the stream. Bullish, yes, for sure. 50 base point is going to be bullish, yes, indeed. This is definitely going to be bullish for the markets. But what is going to be even more important is going to be what Jerome Powell is about to say during the FOMC meeting. So yeah, let's watch that. Let's watch that. What how about the CME gap down below us? So that CME gap down below us, I will quickly mention it. I will say it again, but I've been saying it so many times. If you have been following me for a longer time, you of course already know, because most of the CME gaps tend to get filled. Most of the CME gaps tend to get filled. This chart, right? Most of them get filled very quickly, but sometimes they just are there as traps. And for example, this one, during the last time we tried to be breaking above the previous all-time high over here. So this was that previous all-time high, right? We actually created one CME gap over here at the exact bottom. We printed a new all-time high, grabbed that liquidity above that previous all-time high, then everyone flipped bullish. But then we once again got towards the downside, very close towards filling this CME gap over here, but we did not. We did not fill this CME gap. We actually instead created a new one. So now at this point over here, everyone was very convinced we were gonna come back down once again to be filling up these two CME gaps, because we were very close, right? Everyone got it in their emotions that we needed to be filling up these two CME gaps, but we did not. Actually, we did the exact opposite. We just pumped like crazy towards the upside. So sometimes these CME gaps are just there to trap you. Sometimes, most of the times they get filled very quickly, but sometimes they are just there to trap you. So I'm not saying that this one is going to be a trap. Maybe we're gonna fill it, but I would not count it. I would not count on it. I would not count on it. Anyways, this pump getting retraced all the way. That's why I'm saying do not trade the FOMC meeting or the Fed interest rate decision. Volatility was going to be inevitable. Right there, we have already seen a 2% move. 2% move is nice, but we want to be seeing these bigger moves, right? Ice in that whiskey for sure. For sure. Oops. So yeah, this whole pump getting retraced right now. But actually, guys, do keep in mind that all of this is going to be extremely bullish for that longer term. I mean, most people are not prepared for what is about to come next because of these interest rate cuts. This is going to be the most bullish thing that could happen for the market. Let's have a look on my Twitter feed what people are saying. Are people saying anything interesting? Yeah, 50 base point rate cut. All right. Yeah, JP Morgan was the only single bank that was right. The Fed expects to cut rates by another 50 base point rate in 2024 and 100 base points in 2025. Let's have a look at the probabilities. Reload the page. This page is getting overloaded. Everyone is watching this page right now. we have to wait a long time. Probabilities, let's see. Yep. So right now we have seen this one. Then in the next one, we are gonna expect a 25 base point rate cut, right? Because right now the current, this site is so laggy right now. It's so laggy. Everyone wants to have a look towards this page. But yeah, end of the year, it's gonna be a 75% rate cut. 75 base point rate cut. That's what's going to be expected. Yeah, the website just needs to be updated. But everyone is using it right now, so it's just too laggy. By the way, 15 minutes left for the FOMC meeting. Going to be an interesting one. Let me have a look. There we go. Right now. I am just preparing some things, guys, for the FOMC meeting. I want to duplicate this. There we go. Go. All right. Right now, it's all good. We probably want this one in this corner. There we go. There we go. All right. Right now it's all good. 50 basis point is actually bearish. I think it's because Powell sees something off, so he is rushed to cut the rates. Yes, that's actually what I've said as well during the beginning of the stream. I think a 50 basis point rate cut is going to be more bearish, I think, because cutting rates very aggressively, it's not signaling that we're going to be seeing a soft landing. Cutting interest rates very slowly but surely, that's very bullish for the market, because that's signaling a potential soft landing, which we are not seeing right now. So I don't know. I would actually myself consider it more bearish, but well, the markets are considering it bullish. So who cares, right? The markets are considering it bullish. And that's all that counts. I think Marjax is down. I'm not too sure. I don't choose the exchange at the moment. Anyways, Bitcoin going up once again. Guys, this is what I've been saying. This is like a typical FOMC meeting or like interest rate decision event. It's like typical. Only 10 minutes left, by the way, for the FOMC meeting, but this is like so typical. First a big shakeout over here, then a huge pump, and then retracing it. Right now going back up, like it's a lot of volatility in both directions. 0.5% is bullish for short term, bearish for mid-term, and bullish for long term. Yes, indeed, that's also exactly what I think. Rate cuts are going to be bullish for short term, bearish for mid-term, and bullish for long term. Yeah, as long as Powell doesn't mention recession, we are good, indeed. If he still is saying that everything is under control, I think it's very bullish. If he's still going to be mentioning a soft landing, it's going to be extremely bullish. Let's grab a proper 1 minute chart. This one is fine. This one is fine. We want to have a look in towards the 1 minute chart. Yeah, some consolidation going on right now. Just waiting for the FOMC meeting, honestly. I also don't think any new news just came out. Nope. Let's have a look at the stock market. JP Morgan was the only bank. Or no? Anyways, guys, this could turn out to be very bullish. Extremely bullish right now for the markets. But honestly, it could also turn out to be a little bit of anti-climax, in my opinion. If we're not going to be breaking above this level of resistance over here, we're still just going to be in the same range. We're still going to be in the same range, so nothing changes at all. But guys, still, it could turn out to be very bullish because if Jerome Powell is about to say something crazy, we're about to see a huge pump. It's all going to be depending on that. Like, we can have a look into what's all of the charts right now. Inevitably, we're going to be seeing a big push towards the upside. Inevitably, because yeah, markets are starting to look pretty bullish with this equal low over here or higher low, however you want to be calling it. Falling wedge over here. Inevitably, we're going to be seeing a bullish breakout. A stock market on the verge of printing new all-time highs over here. Actually already printed a new all-time high, right? I mean, this could turn out to be very bullish. But let's see if Bitcoin can be breaking above this level of resistance. If it doesn't, it's going to be a little bit of anticlimax, right? This is going to be like the perfect setup in the market. Maybe it's already kind of priced in, but who knows, right? I do still think we're about to see a bullish breakout. Can you take a look at the Fetch AI bullish head and shoulder? Let's do it for a minute. Let's do it quickly before the FOMC meeting. Let's grab a different chart. So, oh yeah, on the daily inverse head and shoulders over here. Yeah, this one looks good. And this one looks bullish. Nice. Nice catch. Just whenever we're going to be breaking above this resistance, definitely gonna explode. So let's see. Right now, 4 minutes left. 4 minutes left for the FOMC meeting. Thank you, no problem. So yes, guys, this is the first interest rate cut for the first time in 4 years. By the way, BlackRock inflows at the current moment are actually slowing down. Should we be worried about this? I don't really think so. It's, of course, natural. It's natural that at the beginning, the inflows are going to be way more exponential than in the end. And also, of course, the price action for Bitcoin has been lacking. It's not been doing much. So yeah, this is, of course, to be expected. A little bit slowing down. But I do think that at the next rally, towards the upside, it will once again catch up. Put music in the live streams. Yes, after this live stream, I will be having a look into what's music to be putting in the live stream. But still trading in September, guys. September has always been a bad month for Bitcoin. Q4 will be insane. Rate cuts, we are seeing it right now. It's happening. Also, by the way, this is pretty interesting. We are almost there at this blue line over here. After the Bitcoin halving, this is like the date. Bitcoin always goes exponential. So yeah, we're almost there. Just a few days out. Anyways, we're also 2 minutes out from the FOMC meeting. So let's have a look at the minute chart, like real degents, and let's load up the stream already. And you should already hear this music right now as well. There's a little bit of background music from the FOMC meeting. Let me mute it right now, actually. So let me make this bigger. There we go. To prepare ourselves for the FOMC meeting. All right. Let's put it in a corner. All right, I'm ready. Only 1 minute left. There we go. I will be muting myself as well right now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in.
Thank you.
Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based
Sure.
on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi. Thank you. Fed official.
Okay, so yeah, let
Neutral by
me
the
just
end
put this a little bit lower.
So does
So now we're just going to be getting a whole bunch of questions, which is going to be, yeah, still important, but a lot less important in my opinion. Definitely, I would have considered Jerome Powell to be actually more bullish during this meeting. We can definitely clearly see this in the Bitcoin price, right? I even, at the point over here, drew this smiley over here. It was looking very good. If we just go back in towards what Jerome Powell has been saying exactly, this is a very good page we can be having a look in towards.
Estimate what the neutral rate will be at any given time, but
Here at the following.
we know it by its works. So that leaves us in a place where
There we go.
in the base case to be continuing to.
So there's been some notable things which have been said.
And that'll be guiding us in our thinking about
All right.
the question that we're asking at every meeting.
First of all,
Appropriate one. We know if you go back
here, this one was very important because at this time when Jerome Powell has been talking about this, what we actually saw in the Bitcoin price action. Oh, by the way, right now something important has just been said, probably. But when Jerome Powell has been saying this, we saw this dump back towards the downside. What he said is upside risk to inflation have diminished and downside risk to the labor market have risen. So I think this is going to be a little bit more bearish, but generally all of the things he has been saying was actually quite bullish, which of course has been expected.
which is toward
Now the dot plot actually is looking quite bullish in my opinion, and this is just what the Fed is expecting. They are going to be expecting that in the long run we're going to be seeing interest rates actually staying at around 3%, which is going to be bullish for the market. Right now they're going to be expecting this kind of slow kind of soft landing, right? So for now this is actually looking very bullish. Anyways, for the Bitcoin market, I will be going back towards the questions in a minute of this live event we're seeing. But right now I just want to be saying for Bitcoin, we're still not breaking above this level of resistance, right? Stock market also not really breaking above this all-time high. So I think, honestly, we're going to be kind of cooling off more in the coming few hours after this event. Now, we need to be having a look into what else is going to be happening after this event, if something else notable is going to be said. Now, I do not think it's going to be very likely. I think we're just going to be cooling off more, kind of, in the coming few hours. I think that's going to be more likely, not breaking above this level of resistance. That's very notable to keep in mind. And still, of course, having this bearish divergence, all of that, nothing, everything remains unchanged pretty much. But yeah, let's have a look at what's going to be happening next. Definitely today was a bullish day. Today marks a very pivotal day, but for that immediate short term, I do not think we're going to be seeing any more kind of huge pumps. So let's have a look at what is going to be happening next, what is going to be set next during this live event still. So let's have a look.
We're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilik of the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there, but so I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's, our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that. And we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that. Because, there is thinking that the time to support the labor market is when it's strong and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. You know, it's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, you know, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I mean, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, you mean after we get through all of this? It's just great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. Again, we only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene.
Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not doing, we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear, and as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So that's, I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, you know, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, you know, business people who are actually out there doing business. So I think, you know, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, you know, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but you know, we might well have. I think that's not, you know, that doesn't really answer the question that we ask ourselves, which is, let's look, you know, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth. Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's, from our standpoint, I can't really speak to mortgage rates. I will say, you know, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. You know, we just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. I completely We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in?
All right. Yep. I think this is actually looking quite bullish. What we have seen today, honestly, what we have seen today is going to be just very bullish for the market, right? But in the short term for Bitcoin, just nothing much is happening. Yes, right now we're seeing a slight little pump back towards the upside, but honestly, 0.6% move on the day towards the upside. It's not that big. It's literally not that big, this move, which we are seeing right now. Yes, we made a nice new high over here. Yes, the stock market did print a new all-time high over here, but it is still just consolidating at the same old place we have been consolidating at the beginning of this day. But in that macro trend, this is definitely going to be marking an historic event, definitely going to be the most bullish thing that could ever happen. I think the Fed meeting, the FOMC meeting, was actually a bit to be expected, because everyone kind of expected that Jerome Powell was about to say this exact thing. Everyone already kind of expected it, and that's why we didn't pump that massively, but also we did not crash towards the downside. So we just still kind of consolidated over here. I think we're just going to be continuing to consolidate over here. As long as Bitcoin cannot be breaking above this level of resistance over here, I would not become too bullish at this moment over here. Yes, if we can be breaking above this level over here, through the night maybe, through the night, because I will be going to bed shortly after. But if we're going to be breaking through the night above this level over here, definitely it's going to be extremely bullish. But I just do not think it's going to be very likely. I think we're just going to be consolidating even further over here. Have a look at, for example, this level of support over here. I think we're going to be once again retesting it very shortly. All right. I think that's going to be the more likely scenario. Just keeping it real, Yes, in that long term, this is going to be extremely bullish, but in that short term, do not get too excited at this moment. Anyways, guys, with that being said, make sure to be subscribed to my YouTube channel, because tomorrow another very important update video will come tomorrow morning, so be sure to be checking that one out. Also, if you have not done this already, make sure to check that first link down below. Sign up over on OKX if you want to be following me with my next Bitcoin trade that I'm going to be taking at this Bitcoin breakout over here. So make sure to be following me over on copy trading over on OKX with that first link down below, because also with the first link down below you can be getting a 30% trading fee discount and a $60,000 deposit bonus. So that is going to be absolutely insane. Make sure to be checking that one out. Also, you can be getting these bonuses over here, for example, an Omega Moonwatch, iPhone 16, AirPods 4. So that's going to be insane. Make sure to be checking it out if you want to be following me with my next Bitcoin trade. Anyways, guys, with that being said, I'll see you in another update video tomorrow morning. Make sure to be following me over on Twitter, and guys, I'll see you later.